I am about to show you undeniable proof of how
micro-rebalancing
it systematically yielded over 30% more profits than just holding a position of the S&P 500. This is accomplished without any sophisticated trading technique or painstaking technical analysis. You will see that it is so easy that anyone can implement this method. I feel like the SPY, or the S&P 500 index, is a very good indication of the results you may expect. It, along with the QQQ, or the NASDAQ 100, has the longest history using the trading method, and that helps the results not to be too skewed one way or another. Of course, it will still look better when the market is up and worse when it is down, but the high number of trades in the position helps to level out the results to better see the advantage of using the method over a longer period of time. Because it has a longer history with more buys and sells, to change the principal or the target amount, it is a little more complicated to compare it to the regular investor, just holding a position or trading in the entire position. But we can still do it. So we start way back in September of 2020. We had 100 shares of the SPY after just selling 100 shares. It was trading at $334.19 when we established our principal and target amount. So that total position was worth $33,419 at that time. And that became the target principal amount. So we started to use the method on 100 shares of the SPY on October 5th, 2020 for the first time. Here is the spreadsheet and the actual trades placed, so you can see this is legitimate and not just hype like so many of the so-called trading gurus claims. Here's the list of all the buys and sells we made in the position, with the intention of changing our principal or target amount invested. The total amount of shares purchased were 616. The total dollar amount of those purchases was $238,206.78. We will divide the $238,206.78 by 616 shares to get $386.70 average cost per share. Now, these values may be somewhat off due to the fractional pennies in the execution price, but overall, it will be pretty close. We did also deliberately sell 175 shares outside the regular rebalancing trading method in order to reduce our target principal. 100 shares on May 4th and 75 shares on July 16th of 2021. In order to get a fair comparison, we will deduct those 175 shares from the 616 to get 441 shares. Our last trade of the SPY was for $435.38. That would mean the investor who does not manage his account would have a gain of $48.68 a share if they sold all of their shares at that point. So that would be $435.38 for the current price of the shares, less $386.70, the average cost per share, which equals $48.68 gain per share. So all we have to do is multiply that gain by 441 shares, and we will get a total of $21,467.88. That's the gain for the passive investor who is not using the trading method. Now, we will add the gain from the other two sales on May 4th and July 16th. May 4th, we sold 100 shares at $413.70 a share, using the average cost of $386.70 means there was a gain of $27 per share for that transaction, and that's a total of $2,700. We also sold 75 shares on July 16th for $431.40 a share, which means a gain of $44.70 per share multiplied by the 75 shares equals a gain of $3,352.50 for those 75 shares. Those two sales together is a gain of $6,052.50. That's on the 175 shares that were sold. So we add that amount to the $21,467.88 gain on the other 441 shares, and we will get a grand total of $27,520.38 as a total gain for the investor who would have to sell his entire position on those dates. Remember, this will mean that that investor has to lose the entire position to get those gains. Now that's actually pretty good results. But, as you can clearly see,
Micro-rebalancing
yielded a whopping $36,180.93 in profits. That's $8,660.55 more than the first investor who didn't use the method. Almost an $8,700 difference. That is over a 30% increase in profits just by using
micro-rebalancing
consistently. Now that's in black and white, real data and real trades, in a real position over the course of about 15 and a half months. This isn't theory or up to interpretation. I'm providing you with proof of how the method actually works. Those results are even including this last bit of weakness in the markets, as investors are concerned about high inflation, rising interest rates, and tension with Russia and Ukraine. Also remember,
micro-rebalancing
does not require you to sell the entire position to get your gains. You only take the gains out as profit. You still own shares in the investment in case it goes up more. You won't miss out like the first person who had to trade the entire position. Best of all,
micro-rebalancing
doesn't require timing the market or analyzing any charts or technical indicators. It's just basic simple math that anyone can do. It is so simple and logical. Anyone can do this, even if you're a complete novice to investing. It doesn't matter how much or how little you have to invest. Results will be the same on a percentage basis.